Hello and welcome to the third episode of our Syrup series. My name's Joe, and today I'm going to be running you through a bit more of a detailed overview of the Maple protocol and specifically our web app. Maple is an institutional lending platform, and what we've built at its core is an underlying set of smart contracts that facilitate lending to exist across an on-chain ecosystem. We're built on both Ethereum and Solana, and then we enable our customers to access and interact with these smart contracts through the web app. And that's what I want to run you through today. Here you can see the 4 core protocol participants that interact with our lending pools on Maple. You have PoorDelegates that are key to the protocol. They underwrite the borrowers, perform due diligence on them, and then negotiate terms to eventually deploy capital to them in the form of loans. The borrowers on the platform are institutions that request and service their loans through their real-world cash flows that they generate. Those cash flows are then returned to the lenders on the platform. They're the participants that deposit capital into the pools and leave the responsibility up to the pool delegates to interact with the borrowers and underwrite them, issuing loans to them. And finally, you have cover providers. They provide the first loss capital and take an increased risk versus normal lenders because in the event of default, they get liquidated first. Let's dive into PoorDelegates in a little bit more detail. So PoorDelegates use the Maple software to run their credit funds. This enables them to run their lending businesses more effectively and transparently. But in order to operate a safe and compliant business, they take the best elements from traditional finance and DeFi and blend it on-chain through our smart contracts, but then also are enabled to pursue the borrowers with real-world enforcement through our off-chain activities and the legal agreements that exist. The main role of the pool delegate is to conduct thorough financial due diligence on potential borrowers. When performing those credit checks, they look at leverage, equity cushion, historical performance, business cash flows, and an overview of their operational risk management. There's then KYC and AML procedures placed on all borrowers, and then they enter into master loan agreements. These are then signed with each borrower on the platform, as well as then for each loan that's conducted on the platform, there's a separate loan agreement that's signed by both the pool delegate and the borrower. This enables legal enforcement and becomes super important in the event of a default. Once a borrower has gone through all the onboarding, KYC, AML, and signing of these agreements, they're then whitelisted and onboarded as a borrower on the platform. They can then connect their wallet, come to the web application, request a loan, and then have that loan funded by the pool delegate of their choosing. Pool delegates then receive these loan requests from the borrowers, can view them in the web app, review the terms, ensure that they match up to any off-chain legal agreements, and then fund the loans from those pools. Once the loan is active, delegates then receive regular updates from borrowers, and the smart contracts collect the loan repayments from these borrowers and distribute them back to the pools and ultimately to the lenders so that they're earning their returns. One update that we've introduced recently is refinancing, and this will enable borrowers to request to refinance on-chain rather than having to repay the loan and then have a new loan issued to them. It'll enable greater capital efficiency for borrowers and much greater flexibility for pool delegates in managing their pools. Now let's take a look at lenders on the platform. So lenders come to Maple to earn yield. They seek out yield opportunities and are able to make assessments on risk-adjusted returns. Lenders can choose the pool to allocate capital to, and it's a set and forget solution, allowing the delegate to manage their capital and earn attractive returns for them. The web app for lenders is a very simple interface. They're able to connect their DeFi wallet and then interact with the pools directly to deposit either USDC or WETH. They're then able to return to the platform at any time, interact, connect their wallet again, and then view it through the account history or account overview, a history of all of their transactions, interest earned, the size of their current position, and any rewards or other earnings they've made throughout the lifetime of their deposit. It's completely transparent and traceable because it's all on-chain. And finally, let's round out with borrowers. So I touched on this a little earlier. But borrowers come to Maple to access capital efficiently. They can build up a strong reputation with delegates on chain over a long period of time, which will give them greater access to capital into the future. Whitelisted borrowers go to the web app, connect their wallet, and request a loan on chain. The terms on chain are matched with off-chain legal agreements that are signed by the pool delegate and borrower, and enables the pool delegate to pursue the borrower in the event of any default. The pool delegate reviews the loan details and issues the loan on chain, sending funds from the pool to the borrower via the smart contracts. Borrowers then make their interest repayments throughout the lifetime of the loan, typically every 30 days, and then pay back the principal at loan completion. A portion of each interest payment goes to the pool delegate and cover providers, with the remainder going to lenders to make up their returns. So today we've covered the basics of the Maple application, and you've been able to see how the web app enables customers on the platform across all different user flows to access and harness the capability of the smart contracts. Thanks for watching.